know what ticks me off? When your credit score goes down because you tried to do the right thing. I just got a notification here. My credit score went down. I finally paid off my car loan. I make the payment every month for 3 years. I make the final payment, and now my score goes down. How is that even possible? How does my credit score go up? I made the payment every single month. Shouldn't it go up? They said it's a net. The credit company said that it's a negative when you have a closed account. If you pay your bill every month and then finally pay off a loan, how does that make your score go down? It should go up.
Okay, so let me just clear up a few things about that video. Now, when your credit score goes down because you tried to do the right thing, paying off an active account, the score decreases because the account is now closed and will not be serviced moving forward. There is no longer a balance that will be added to your overall credit debt versus your income ratio. If you pay off your debt on an older account and subsequently close it, your credit score will drop. You've increased your overall credit utilization. You've lowered the average age of your accounts. Let's not be silly. The system was not designed for you to not have debt. What they want is that you have debt and you make sure you're paying it on time as per the terms and agreement. Positive accounts or loans that were paid on time and maintained in good standing while they were open, the loans will remain part of your credit report over the course of 10 years from the date of the last activity. Now, installment loans that have delinquencies on it, delinquent payments on it, will actually have a negative impact on the other end. They may continue to negatively impact your score even after you have paid them off. Paying off an account in collection may or may not help your credit score. The impact depends on a variety of factors, including the credit score modeling being used. You have the Vantage score model and you have the FICO score model. For the older credit models, it will reflect that a collection has been paid and is now at a zero balance, which can positively impact your score, right? Newer credit scoring models, however, will ignore the zero balance status on the collection accounts. It's almost never a bad idea to pay off debt, especially high interest consumer debt. This holds true even if it will cause a temporary drop in your credit score. Your financial health is more important than your credit score, especially because there's no way to fully predict the results of each action you will take as it relates to your credit. Ultimately, if you continue to make timely payments on your outstanding debt and keep your spending in check, you should see your credit score start to rise again with time. That's just my take on it. But I understand his frustration, but paying off a debt, paying off an active account will result in a decrease in your credit score.